in listen-only mode.
Good afternoon, everybody. Stan and Jack here for Ask Us. Ask Us is a subscriber-only webinar. We do it once a month for anybody that has questions about the service, about the way we do technical analysis. Maybe you have a specific question about risk management or whatever. Okay, so we deal with all of those questions here once a month. We try to cover a little bit about the markets as well, because obviously market questions come up during these webinars as well. So we're here to cover all of that, and so we are going to ask you. And by the way, the webinar is driven by your questions. So in the GoToMeeting tab, you'll see a questions tab. Please key in your questions there. And while you're keying in questions, I just want to point out that the December free webinar page in our blog, there's the chart chat that we did earlier this week, or I'm sorry, on Sunday, December 4th. And we have, of course, the Ask Us webinar will be posted here when we're finished, but we have two long-term forecast webinars coming up. We're going to do one on the 15th of December, which is long-term, looking at 2017 for indexes, bonds, and currencies, and another longer-term one on the 16th of December for energies, metals, and commodities. We will probably be referencing this work in all of our other work, so I think it's probably worthwhile for you guys to attend those, or at least have a copy of the videos handy, and I'll make sure those are posted here on this page. So that's something that I just want to point out so everybody gets a feel for that. Anything else, Jack, you want to mention or talk about before we take questions?
No, I think we're good to go.
Okay. We have a question here on ES, NQ, and TF, an overview, and an overview meaning what time frame? Do you have a sense of what time frame? Are you a day trader or are you a swing trader? Just give me a sense. Okay. He says both. So do you have a couple of charts?
What exactly is the question?
ES, NQ, and TF. He just wants to say he just wants to have a look. So happy to tee up like ES while I'm getting that busy. If you want to do TF after that.
Okay, sure. No worries.
Makes sense. All right. Okay. So all right. So ES is very tightly related, of course, to the S&P 500. Here's a daily chart of the S&P. So let's just start with this since it's right in front of me. And where we are and what I posted on the feed today is we are at target. Okay, we said 2250 and we said 2250 when we were down here. Okay, and that's basically an ABC. Okay, three-wave move, 100% fib. We're there. That also coincides with the monthly R1. Now, here's what I want to say. Even though we are at target, and what I put out on the feed today was we're at target, but look at where we are in RSI. Okay, so when you go down to a lower level chart, what you are expecting to see on RSI is a pullback and a lower high that will equate to a higher high in the index. So we are at the 100% fib. Am I expecting a pullback? Yes. Am I expecting a turn? No. We're not ready to turn yet in this market. We're going to have a pullback. We're going to go higher up into this high window, and that's what I'm expecting, okay? So back to, let me show an hourly chart just real quick. Trend line, okay, the W, the X, and we said, watch for higher prices into our window. We're not even in the high window yet, guys. That doesn't even start until the 15th. So this is a big push up into the A equals C level, okay, the A, B, C, A equals C, up to 2250. From here, pullback, 34s are likely. We could even go a bit deeper, and then higher prices. 67s is now a target. Also, we've had this number on the board for quite some time. 86 is also a target. So we'll see what happens here, but a pullback and higher is what I'm expecting given what RSI is doing. On a 1 hour S&P, take a look at what you see there. We're breaking the RSI price cycle. This breaks typically in a back test before you see a trend line break. Okay, so I'm expecting here on an hourly basis the following, and this is the setup I want to see. I want to see that, and then I want to see this. You guys have seen me do this before. I want to see some divergence set up here like so. Okay, that's the setup I'm looking for into the end of the year. I don't think we're there yet. If you're going to day trade this short, I think you day trade this market short. This is not a market at this moment that you would want to swing trade unless you have a very large account and you want to put on a small leg and let this thing tumble around up here and then put on another leg up here higher. I mean, that's an option for you if you're a swing trader. But, at this point, I would be day trading short. And I would be day trading long. If you are long from anywhere down here or anywhere around the B wave or anywhere around the X wave, okay, you should have been out 1/3 here. You should be out 2/3 at least. Small trailer size is all you should be right now long. Okay, so we're fixing to turn here. We're not ready to turn here yet. We don't have a setup yet. The E-mini. Let's go to the E-mini. With that as a bigger picture overview, okay, we expected a 3 back, if you remember, into the 83 area. Okay, we got that, and we are now extended. We are really, really extended. I want you to look, though, at today's action. This is very, very important. See the high here in RSI? Okay, look at where that is in price. Okay, that is here. Okay, we continued higher on fewer and fewer and fewer issues, okay? I don't remember my 52-week new highs today, but it was very low, okay? So there's not a lot of participation in this move, which is fundamentally what a divergence is, okay? A divergence is the market is carried higher on fewer and fewer issues. So are we ready for a turn? I think we're ready for, I'm sorry, let me be clear. Are we ready for a back test? Yes. Yeah, you can see a little 3 back here. We have an A, we have a B, probably a C wave lower. We could see, for example, I mentioned this on the feed as well today, 35s, okay? 37s is the measurement for the A equals C. But, we haven't broken this trend line yet. I would expect to break that trend line and then see a higher high. We'll see where that goes. But again, looking for a pullback here, 3-wave move, one more higher high on diminishing 52-week highs. I mean, look at your new 52-week highs, and you'll see it will shrink down into the 200s. And that's what we want to see in this next leg up. Okay, so I don't think we're there yet. We're not ready for a major swing trade yet. I think we're close. I think we're maybe a couple of weeks away, but we're not there yet in my book. So let me throw it back to you, Jack, and see what you have to say about TF. You ready?
And it's not the sort of trade where you want to arrive early. Yep. I'm ready.
Yeah, that's very true. Very true. Arriving early is not our idea of fun. So swing trade-wise, on the daily update and also in the morning, I'm sure Jack and I will be pointing that opportunity out. But for right now, our suggestion is if you're going to trade the indexes, day trade them for right now until we get a better setup.
Right. Can you see my screen all right?
I see a bunch of, there you go. Now I see a chart.
Okay, good. Right. This is the TF chart I posted this morning. I haven't done the bonus chart for tonight. I'm working on it at the moment. But this is very nice rising wedge. But I have to say, I'm in a transitional phase. I'm actually using the futures charts more and more, and I have been for the last year or so. So I'm assessing how well the patterns work relatively. And a lot of the time, the RTH ones do work better, and I'll illustrate that in a moment. This is a beautiful rising wedge, though. It's really nice. We had obvious resistance there. We went through, and then we went through to the next trend line there, and then we went beyond that too. This could be a bearish overthrow, but what I would point out is I would then go back and have a look at the rut chart. This is the rut pattern I posted on my blog 2 days ago, on Tuesday morning, talking about where rut might be going. And look where resistance is. We haven't reached it. We've almost reached it, but actually, this resistance is a pretty good match with what Stan was talking about. You were talking about 1393, weren't you, Stan?
Yes, that's my TF target.
That's a pretty good match, and I'm wondering whether we're going to go up and hit this trend line and then reverse back down. And also on this one, this is the trend lines are in very different places here. I mean, this is, if we go back, if we hit that and then retrace here, we could head back to 1350 to 1360, which is a reasonable target area. Whereas on the TF one, the support trend line I think would be long gone by then. Yeah, I mean that's at 1362 and rising more rapidly. So sometimes you get a match between the futures charts and the RTH charts, and sometimes you don't. This isn't a match. They're both wedges, but they're very differently located wedges. I think this one I posted on Tuesday morning is probably what we're really looking at on TF. You've got a very nice resistance trend line there, pretty decent support trend line, and we haven't quite hit it. I've got resistance there in 1390. and I think we'll probably find some resistance there. I'm not expecting it to go over it significantly. That'll be slightly higher by the time we reach it tomorrow, but I wouldn't expect it to go over particularly because I'm not expecting this wedge to break down. It could break down, but I think I'm not seeing any obvious reason to think so. What I would like to do is I would like this wedge to last for another week or so and to make the actual high within it. So I'd like to hit wedge resistance, come back, test wedge support, and then make the last leg up. And then that gives us a beautiful pattern, which pretty much hands us the key to the high, which is what I love to see.
I'm looking at a snapshot report, Jack, on TF. Let me just share this real quick. And I look at this every single day. Okay, I don't share any of this information on the feed or on the daily update. But the Russell right now in terms of commercial longs, 225,000. Okay, commercial shorts, 269,000. Okay. So that's a sign that this is going up on air. Okay, we don't have a blow-off top scenario where you have like a blow-off top would be more like commercial longs 500,000 and commercial shorts, far less, 250,000. So that's the commercial positions. Large speculative longs, 98,000, large speculative shorts, 59,000. So that's still positive long. And the small specs, those are those are us guys, by the way. That's 24,000 and 19,000. So that's what the positions look like on TF. And just to contrast that with ES, I was just looking at this tonight. This is very interesting, by the way. Okay, what I'm about to tell you. Hold on one second. Let me pull up the snapshot report. So commercial longs and shorts are even right now on the mini. Okay, large speculative shorts are larger by 100,000, and small spec longs and shorts are even. So, for a market that's going up and up and up, this is going up on air at this moment in time. So I'm just sharing that with you. I'm not saying that we're going to go and drop 500 points, okay? But I am saying we're getting into a position where a significant turn is going to happen, okay? So with that said, Jack, let's go on to the next question. So
actually, I'll just add one more thing, which is that we're actually up. Right now, as we speak, with TF at 1388, we are actually up on TF 264 handles from election night.
Yep.
Which is,
and
wow.
the ECB and Draghi's announcement, which I don't know if people paid attention to that, but this is the other thing to notice. He expanded QE to last until the end of 17. But what he did, and what people didn't notice, I don't think they noticed, is that he made each month smaller. He cut the monthly budget. He made the overall budget larger, of course, but he cut what he was planning to do in future months. So I don't know that people noticed that, but so I think that had a lot to do with today's action. Okay, Draghi's announcement this morning. So and by the way, do you remember when QE first came out, or when the second QE came out? I mean, we rallied for like a month afterwards. Okay, so I don't think that's going to happen this time. But QE, how can I say this? I think the market is pretty numb right now to QE, in my opinion. We'll see. We'll see what happens over the next couple of days. But small back test higher is sort of the message, I guess. Just recently started following your service. Do you base assessments on RTH charts only or overnight charts? And Carlton, both. I think they both give hints and they both give clues. The overnight charts especially do. So.
Yep, me too.
Yep. Okay. When you say three-wave move, on what chart will you see that? And hourly? Okay, Dom, you want to throw me back the screen?
Sure. Okay.
And Dom, first of all, three-wave moves are everywhere. They're on all charts. Okay, it depends upon what scale you're looking at. So, I'm looking at the Russell right here. Okay, and you can see we're already at target. We're already at our high in the S&P, in the Russell. Look at where we are. We have divergence off of this W, which is good, okay? But we need to have a back test. It's the same message I just gave you, okay? We need to see a back test in three waves and higher. Now, typically, you're going to see this on an hourly chart, okay, like right here, okay? This back test here and higher, we were looking at a flat. There's three waves down. Let me go in on a shorter wave, on a shorter term chart here so you can see it. And when I say in three, the market moves in 3 waves and 7 waves typically. Okay, so you see right here from this W, here's 3, there's your A, here's your B, and then here's your C. There's a 3-wave move, okay? And so this is an impulse, okay? I'm looking for a 3-wave move. Like, for example, a 3-wave move we could be setting up right here. You see the little double top right there, right? Okay, so here's a 3-wave move that would satisfy what I'm talking about. There's an A, there's a B. We could see 66s. We could see 76s, okay, as 2 potential measurements. Okay, so that would be enough of a pullback. The other possible target I would look at on the Russell, and I'm just doing this for example purposes, would be 64s, okay, 1364. And then from there, that would give us room on RSI. Okay, let me just get rid of these numbers here. Go back to an hourly chart. And typically what I'm doing, guys, before an entry is I'm going to a lower level chart and I'm looking for my entry. Okay, so, this right here, let me just move this out of the way, this line, on the Russell, straight up shot with RSI. This is not where I get swing short, okay? This is an impulse. We need a divergence leg. So we need a pullback, and then a divergence, and then we see a lower high on RSI with a higher high on the Russell, and that's something that I would expect to see. Okay, it doesn't have to be a big, 100-point higher high or whatever, but that is the setup I'm looking for. The high window in time doesn't really start until the 15th or so next week. Okay, and we have at least another 4 days, counting bars. If you count daily bars, which I count daily bars a lot, we have at least another 4 days to the upside. We're going to get a pullback, another couple of days to the upside before we see any significant turn, in my opinion. Okay, so that's a 3-wave move. By the way, again, you see that on a 1-minute chart, a 1-hour chart, a weekly chart. How does this move in indexes feel like a blow-off top move ahead of the big bear move? Thanks. What do you think, Jack?
Well, I'd have to go with no. I don't think it does. Not yet. I've seen them. Well, I mean, having said that, if it was a blow off top on something like, well, silver, no, it doesn't feel like that at all. This is as powerful as this is. It isn't anything like as powerful as those would be. I think is this likely to be some kind of wave 5 move? Yeah, I think it is. I think we're going to see a very sizable retracement in January to April, and I think that could be very, very sizable. But I mean, we'll see where it goes. I mean, you start down the road and you see where it ends. So I think, are we looking at a major market top and the market's going to fall to zero? No. I mean, the other thing you've got to remember is, over a long period, the bulls always win. Always.
On indexes, I agree with that. Yeah.
Yeah. On indexes, in the long term, being a bear makes no sense at all. So the bulls always win. I mean, really, what you're looking at always on indexes is impulses and retracements of one degree or another. And it's better to think of it that way. Are we likely to see a sizable retracement soon? Yes, I think we are. Do I think this is going to be a major black swan high? No, I don't.
No, it's not. I agree with you. And let me show a quick demonstration of like you're saying a 5-wave move. We're in like the 5th wave. So here's your 09 low in the Russell, right? Here's your 1st wave, your 2nd wave, your 3rd wave, your 4th wave, and yes, this is the 5th wave. Okay. Now, what I want to say is this, and this is not true everywhere in the market, but it's true on the Russell. Okay. There's the length of wave 1. Guess what? It's very close to the length of the current wave. So we have hit the 5=1 target, and we've hit my reverse Fibonacci target, which is the 1.236 of wave 4. Okay, so are we in an area where we could see a big decline? Yes, we are. But the rest of the indexes don't line up for it. They don't line up for it. So, on the S&P 500, for example, the next leg down, once we finish this divergence leg, okay, I'm looking for a pullback like into the 2000 area. So I would expect to see in July, for example, in the April through July period, sometime in January, we might get up to our big high here of 2286 as an example. But I have cycles that say that July-ish will be the low. Let me just go out to the right here a little bit more. So here's July, end of June, beginning of July. Look at where the trend line is, right here. Okay, that's right around 1970 to 2000. So will we get a decline into that area? Yeah, we will. Are we going to start a new bear market? No, not the time for it. Okay, I think we have another leg up after we finish that decline. So
actually, I've got a chart I'd like to show. Do you want to show me the screen for a minute?
Sure, absolutely.
I'll show you. I'll just show you the rut chart for a better idea of where I think we are there.
Yep. You have the con.
Yep. Tell me when you can see the chart.
I can see it.
Right. This is.
I like that a lot. I have the same trend line.
Yeah.
It's gorgeous. Absolutely gorgeous.
Isn't it?
Yep.
It's I wrote this on 12th of June. If this retracement from the 1296 all-time high was a wave 4 retracement, which now seems likely, then the obvious next major target would be the retest of that all-time high with the monthly upper band currently in the same area. On a break above, rising wedge resistance is currently in the 1360 area. Now, obviously, that was a few months ago, and it's moved, and it's hit. We're hitting it right now. This is an area where I think we're likely to be topping out. I wouldn't expect... I mean, really, what Stan's describing there is a reversal in this area, and we may well find there is not much upside from here, but a reversal in this area, and then the first target is a hit of wedge support, and if that holds, then we head back to wedge resistance.
I would agree with that. I think, and then after we hit wedge resistance again a second time, there's where the bear market starts, in my opinion. We need to see 3 waves up here.
Yeah,
so this is nothing more than 5A, in my opinion. 5A, 5B, 5C, and then we're done. And by the way, the next bear market, just hang on. It's going to be ugly.
Yeah, it is. It's we've been saving up for it, in effect. So anyway, one thing I would point out is, does it have to reverse here? No. There are a number of other options here. One of the options I would mention is the possibility that we would overthrow the wedge here, then break back down below support, and form the right shoulder, the left shoulder, on a head and shoulder pattern, which would then make a new high, possibly with quite a lot of confidence, to form the head. That is something you see quite regularly. You cannot just take that trend line, go short and, head off to the pictures and reckon you'll come back in 2 months and it'll all be fine. The fact is there are a number of ways you can see a top. That is a way we can see a top. If we punch through now, that'll be moving up the list of priorities considerably. But at the moment, working assumption is we see a reversal in this area here, and then we return to wedge support, and then we do the last run up.
Yep, absolutely. I have a question for everybody. And by the way, if you have other questions, please post them. But I have a question for everybody. What would you think about having an options expert here on the Art of Chart? Like, for example, what I just said earlier was, I'm looking for a low in the June-July time frame, and it'll take a month just to get this market to turn and start a decent decline, okay? But, we could play an option today out into the August-September time period, okay? And there are a number of ways to do that. What is your opinion, everybody, on this webinar? Just what would you think about that? Would that be useful for you to have someone to, once a week or so to say, okay, these are the positions you might want to consider? Okay, a couple of people said yes. Okay, so just key in answers to that question, because I think trading futures and options together, that's what I do. I think it's very useful, but not everybody's ready for that. And if you have a small account, by the way, I just want to say this. I think if you're starting out trading options first makes a lot of sense. There's less risk, and you can really lose your ass in futures if you're not careful. So with that said, Jack, next, and people are keying in answers here, so I'm going to tally these. The high window starting on the 15th. You are expecting a small retrace before moving higher, starting on the 15th. No, I'm expecting strength through the 15th. So in other words, what I'm saying between now and the 15th is we're likely to see a pullback. And guys, do not swing trade these small little pullbacks, okay? I'm just saying for those of you who day trade, hey, there's a possibility of a pullback here, which means you might get a day's worth of short in, okay? Maybe make 15 handles. Great, wonderful, okay? But you shouldn't be taking a swing position on one of these little back tests that I'm talking about. The real serious back test I'm looking for, I'm sorry, the real serious short I'm looking for isn't going to happen until after the 15th. So I'm expecting strength through the 15th of the month. And by the way, we have a window that starts on the 15th of the month, okay? And with Santa Claus and Jingle Bells and everything else, who knows what's going to happen in the last 2 weeks of December. Okay.
Typically, we don't tend to see big declines.
Well,
and the fact is, well, yeah, I know, but the thing is, topping processes can take a while.
I agree.
We all know.
I don't remember a December where we had a decent decline, in recent memory at least.
I don't remember one either.
Yeah. Okay. As a part-time trader, probably don't have time to learn options as another subject. Prefer to focus on futures and related ETFs. Okay. Well, that's good feedback. Okay. Jack, anything else that you want to cover while we're here? What are your thoughts on Coco? We can get to Coco in a second.
I had a careful look at it yesterday, and it's just not a classical friendly chart. It's just because I was going to do it. I knew you were doing it on the weekly calls, so I had a look at it, and really I was just getting nothing out of it at all.
Yep. All right. I'll tell you what. Let me show Coco. Dom, I'll show you the
I wouldn't mind running through sugar and coffee and copper.
Okay. Well, we can do that. You want to do that since you have the con now? Go ahead and show those, and I'll show Coco in a minute.
I posted charts on the bonus charts for all of those yesterday. Let's run through those quickly because they're in different positions than normal. Actually, I know some of the guys are trading these, and actually I'm trading some of these too at the moment. So hang on. Right. Let's start off with. Right. Let's have a look at sugar. Now, sugar. This is the most bullish of the lot. We've got a very nice setup here. This is a falling wedge. It's broken up. We are possibly forming an IHS here, but we've already got a double bottom that hasn't made target yet, and we've been in the process of converting the weekly pivot. We basically spent the entire day today on the weekly pivot. It was a very, very quiet day on SB. But the prospects for it going up are very good. I am wondering whether it's going to come back and do a back test of this trend line here. But I mentioned this to Ed on Sunday. He said, "What's your favorite trade for next week?" And I said, and we were here, and I said, SB if it retests the low. And obviously it retested the low, made a marginal new low, and up. I think this has got a lot of upside in it. I'm not quite sure what happens after we get back to the test of the monthly pivot. That's quite a lot of upside just to get there. It's possible we're going to push on through and retrace all of this wedge. That would be a very nice move indeed. All right, let's have a look at
let me throw a comment in on sugar. $20.63. That's the monthly pivot. We see resistance there, guys. We're going to go lower, and we're going to go lower like $16.50, $17.
Yeah.
Okay, so we could have a 5-wave sequence here. In other words, do you have your chart? Let me. Hold on, Jack.
I've just put it back up.
Okay. Yeah, if you look at the decline, okay, the first decline to basically, I'm trying to see the numbers here, Jack, like 21 cents or so, where you have that little triangle-ish type structure, which is on November 2nd. Okay.
This one here, yeah.
Yeah. So that was your W. You have an X higher. The recent low is Y. We could have an X higher, okay, to the trend line, roughly speaking, where the monthly pivot is, right? And if we see the monthly pivot become resistance, we have one more leg lower down to $17. So just keep that scenario in mind as a 5-wave sequence.
And I would mention something else there. This was a triangle, and after this triangle thrust ends, we're expecting to see a full retrace of the triangle thrust. But don't think that has to be now. We recently had a TLT one fill. It just did the full retrace, and I think basically that one had a thrust up, formed another triangle, had another thrust up, and it came back and completed the full retracement after maybe 18 months. These things can take a while, so you do not count on that happening immediately. So could we come up here and fail at the monthly pivot and not do that full retrace now? Yeah, sure we could.
Yep, absolutely. I agree with that.
Right. Okay, let's have a quick look at HG. Now, HG, this is, we're breaking up out of a triangle, not shown on this chart, but again, expecting full retracement back to of the triangle thrust after it finishes. Now, this is a very interesting setup because this is actually a perfect double top, and the target is lower than we would expect it to be. I think, Stan, you were talking about 2.25? 225?
Roughly speaking, yes, right. That was roughly the area.
So, and that obviously is we may well turn there. However, we do have a very valid and pretty nice looking double top that would suggest that it would go a bit lower and just retrace a bit further. This is still well above main support, which I think I've got it in the 2 area or slightly under. That's main long-term support. So could we get that far? Yeah, we could. And the real trade here is not so much the breakdown, which is a nice trade, and we've now broken this strong support trend line I was pointing out on Sunday. So the way is open, and I think it's on the way down. But the real trade is the long when it gets to the low, because we should be starting a major bull market move that'll last for years. So, and there will be some very nice positional longs on copper to be had there. So that's the main thing I'm watching here. But in the interim, there's a pretty nice looking short here, and I think that's going to deliver. Let's have a look at coffee. Now, coffee is the most ambiguous of the three by quite a margin. I just wanted to warn people about this. I mentioned it on Twitter today. Here, this is a nice falling wedge, and it's good. It really is a nice falling wedge. What I would say is this has been a very strong downtrend. Look at where we hit the channel support here. And the next target within the wedge is wedge resistance. And look how we've not been going there. I mean, we've not been testing wedge support either, but it's just basically it's formed this falling channel just heading down, and we're still within that channel. I posted this last night, and we went up and we tested that channel resistance, and we reversed there. Now, at the moment, it's trying to make a double bottom, but first it's got to break this trend line resistance. Then it's got to get up to and break the wedge resistance, which is currently the weekly pivot. And at that stage, we're in the bottoming process. Before then, potentially, this could, one, just head up to wedge resistance and then continue down. And that is very much a real possibility. I mean, Stan and I were talking about possible targets. I was talking about this level here. I've got, there's this level here, and I think you were talking about possibility of 128.
Yes, right.
And I was talking to Stan about that last time we were talking about coffee as well. That would be, we could be doing a full retest of the bear market low. That is lower. And that is very much a possibility here. There's no really strong long here until this trend line breaks. And even then, we're in a bottoming process. So I just wanted to mention that. I really like coffee here. I'm long coffee at the moment. But it's a dangerous trade, and it's not one to get married to in the event that it heads in the other direction. I don't want to see a break of these lows with any force. If we see one, I'll be out. Okay, that covers those three.
Yep. If you're short coffee, you should take profits. We have a divergence. It's going to turn, and I'm looking for a big bounce, and I think that trend line is going to break. And so we need to do that to flush. Coffee I love coffee because it's very volatile. So this is a shakeout move, and so we're shaking out the longs. I mean, we've turned. We're in a trend up. We're shaking out the longs, and going all the way back to the base trend line, I would not be surprised. So at this point, what's the most painful thing that the market makers could do? The most painful thing is to shake out all the shorts and and then have it go lower. So that's
shake out the longs. Yeah, coffee's that kind of instrument.
It is, absolutely. I'm trying to find a chart here, Jack, and I want to try to get this up for Coco, and I'm almost there. Just give me 30 seconds, and you can throw it back. I'll be ready.
Unfortunately, I haven't got one saved, unfortunately.
Yeah, I got one here. Yeah, here it is. Okay. All right, I'm ready.
All right, great. I'll throw you the screen back.
Thank you. Okay, on Coco, Dom, the thing I look for is I look for special opportunities, and I try to post those on the weekly call. Okay, the weekly call, I try to say, okay, look, where is there a decent trade? I mean, a real decent longer-term trade, like the trade in cattle, right? It took over a month, but it was a great trade. We called an 18-month low. Now, what you see in front of you is a cycle chart. This is Coco, and this is an 18-month low right here. Okay, can you see the screen, Jack? I assume you can.
Yep, I can see it. I can see it very well.
Okay, very good. So you can see there's a low window here. You can see all these cycles, 1, 2, 3, 4, 5, 6, 7, 8 cycles lining up, okay? Is Coco going to bounce from here? You bet it's going to bounce from here. But do I know when exactly? I don't. I know there's a window here in time where it makes sense for it for it to come in. And this looks like, it looks like before the 12th of December that Coco should turn, okay? Now, with that said, let's look at, not coffee, let's look at Coco. Okay, here's the thing on Coco that I want to show you, which is the weekly chart, okay? Long-term weekly chart, here's the previous degree wave X, okay? This is cycle degree wave X. Look at the trend line and look at where we are, okay? So I would not be surprised to see a turn right here. We have divergence on a weekly basis, very nice. Go to the daily chart, okay? I was long here. Okay, I got stopped out, and I'm long again as of today. Why? Because we're at this trend line as well. So we're at this trend line, we're at this trend line, we're at this other longer-term trend line, we're at the monthly S1. So I'm long again, Coco, with a stop below, and we'll see what happens. And by the way, guys, this is a fairly risky trade because there's no reversal pattern. If I were you, and if you have a small account, I would wait for a reversal pattern, which is, we get a bounce, we get a higher low, and Jack says inverted head and shoulders, or Jack says double bottom, or whatever the reversal pattern is, and then we go. You'll have plenty of time to get into this because it's an 18-month cycle low. This is going to go places. It's going to take. This is going to be months and perhaps years in the making to the upside, if I'm right on this call with Coco. So we'll see what happens in the next week. Something's going to happen here. We'll see what happens.
And for me, I don't like the Coco chart because it doesn't really do the trend lines that well, but it does reversal patterns just fine.
Yeah, sure does. So the typical reversal pattern I would want to see, and I'll just draw it, because by the way, guys, there are videos on the website. They talk about reversal patterns, and this is catching a knife unless you're really looking at certain technical things, which I do. I wouldn't say everybody should get long. This is a fairly risky trade, but a bounce up to there, a back test like this, short back test like that, there's a reversal pattern. That's a longer-term reversal pattern, and I would love to see that because that would just confirm the move to the upside. Okay, you see the inverted head and shoulders. There's one.
Yeah, very nice.
Another one would be this, a complete retest. Okay, either one of those would be great reversal patterns to see. We don't have a reversal pattern yet, so bide your time with Coco. You don't have to jump in long here yet. Okay, so
either of those would get me interested. Because that with the cycle charts, that's a nice looking setup. It's just the usual things I rely on as well, which are the sort of the trending patterns and so on. Just not getting any strong ones on Coco for some reason.
Yep, and
not every instrument does.
And by the way, if you remember the cattle trade a couple months back, right? Our first entry, we were stopped out, but our second entry was right on the mark. So, we'll see how it goes, because catching an 18-month low is not a precise process. It's kind of a sloppy process. So we'll see how it goes. All right. So any other questions? Let's see. I think we covered Coco. What's your target? At this point in time, my first target is 2688. That's the first target on Coco. Okay. And so I want to see a break of course, this trend line. And I want to see a break of monthly pivot, which sits at 24.89. And the reason I like trading Coco, the margin on Coco is next to nothing. It's under $2,000 for a contract. So you can get a lot of bang for your buck. But the thing about Coco and these commodities, you got to know how to manage risk. If you're not good at managing risk, don't even try it. Okay, that's my advice, because you'll get hurt. And I don't want anybody to get hurt. So, just be cautious what you get involved with. Wait for the reversal pattern. It's probably a much safer play.
And I'd mention particularly that very much also goes for coffee. Coffee can be a real wild animal. Big moves.
Absolutely. I got another question from AJ. I continue to try to correctly draw fib extensions on Apple, Netflix, the big five. Can you go over drawing fibs correctly? Okay. I think it's Well, let's just take a look at a fib. Okay, so I can use this chart, or AJ, would you like me to look at a stock? Doesn't matter? Okay. So, I look for three waves, A, B, C. There's a W. There's an X. Okay. Is there a relationship between W, X, and something else? Well, sometimes yes, sometimes no. Okay. So, extensions are, and by the way, it's I use extensions a lot because I like them. Okay. They work for me. Okay. So an A, B, C, 1.618, you can see the fib, it overlaps there, but that would be a Y wave. Okay. Typically. Okay. The other thing you can do inside of a larger structure is you can look for smaller structure. Okay, so, here is an A, B, C to the 100% fib right there. Okay, so inside smaller structure, I look for three-wave moves, 100% fibs. I do that all the time. Even back tests, especially back tests. Okay, here's another one. Here's an A, here's a B, here's the 100% fib. Now, this was short, okay, and sometimes that happens. There's a trend line here that helps define that, et cetera, and you don't always hit 100% fib. Sometimes you're a little short, sometimes you're a little long, but it's a general rule in my work that I look for three-wave moves. Even this leg here is in 3, okay? Even this leg here is in 3. 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 By the way, you'll see this in commodities a lot more frequently than you'll see it in an index. An index is a little different in terms of its character, but here's another one, an A, B, C, 3 waves. It's down here. We were off here. We have a short target here of 618. We hit that, bounced, etc. And so it's a function of just getting practice doing it. And the way I learned to do this, I learned to do this on a 5-minute chart, and I think that's something I still do that today when I trade the mini or when I trade oil. The level I put out today on the feed, what was it, 50.90 as resistance? I think we're sitting at 50.90 right now, if I'm not mistaken. That came from a 3-wave move. I would say at least 60 to 70% of the time when I'm drawing fibs, the extensions in 3s work really, really, really well. So anyway, with that said, okay, so I hope that answers your question, AJ. If there's anything else that I can help you with, just hit me on the side on the Twitter feed. Okay, so Jack, I think that's a wrap. No more questions.
All right. Great.
All right.
Everybody have a great night, everybody.
Thank you, Jack. Take care.
Take care.
Bye.